Okay, guys, welcome to the Everything Money Plus channel. We're here to discuss a lot of news that happened this week. We're going to go over the super investors. We're also going to go over Michael Burry in his final 13F. The super investors is something that we follow a lot because it's a great place to get ideas. It's a great place to look at and say, oh, I wonder why this investor liked this stock. But what's interesting is we're going to talk about all these investors who talk about long-term holds, and then they're buying and selling stocks all the time. Now, obviously, there's multiple reasons to do that. You know, one stock runs up, you want to sell it to go buy another stock. But these are the things I want you to pay attention to. So first off, let's get right to Michael Burry at Scion Asset Management and what he did this past week. Very, very close to what Buffett did in 1966 and 1967 when he closed down his funds. Here's what he said. Dear investors, with a heavy heart, I will liquidate the funds and return capital. My estimation of value in securities is not now and has not been for some time in sync with the markets. With heartfelt thanks, but also with apologies, I wish you well in your future investments. I suggest investors contact my associate, Phil Clifton, regarding his coming endeavors. He can be reached. Phil is a tremendous young talent in the field of investment and the most prodigious thinker I've ever encountered. Guys, this is very similar to Buffett in the late 60s. What Buffett did back then was the market was getting overpriced. He admitted in Snowball that he didn't want to hurt his return performance over the year. So he closed down his investments and he told everybody, hey, if you want to invest your money, go to this guy right here. But in the meantime, I'm done. A few years later, markets, went a little bit better. When they went down, remember, as value investors, we like it when things go down because that means things are cheaper. And he reopened his investments and started buying again. So is this what Michael Burry's doing? I don't know. I don't know if he has the desire to be as wealthy as Warren Buffett did. Plus, I don't know if he can really do the performance with that kind of capital. But the bottom line is Michael Burry has been a great stock picker even before in fact, remember in The Big Short, one of the investors was so mad at him. He said, we select you to pick stocks, not to look at macroeconomic trends. And the funny thing is now people say, oh no, he's a macro guy, not an individual stock guy. So he sat there and said, listen, I'm not dealing with this right now. I'm going to close this down. More power to him. Is this an indication of where the market is? Guys, a lot of people would criticize these value investors and say, these guys are past their prime. That's another version of it's different this time. When I look at it is, what's more likely? That these guys don't see value out there, or is it more likely that things are just insane? That's the question to ask yourself. What is more likely here? You know my opinion. My opinion is more likely that the markets are probably insane right now. We see massive fluctuations in the markets. We see companies like Palantir and NVIDIA selling for nosebleed valuations, and these aren't small companies. These are really, really large companies. We're going to go over Berkshire Hathaway. They started a position in a company that I thought, I've said before, maybe is fairly valued. Why did they start the position in it? We don't know. But let's break it down by going into let's pull up our first one right here. That would be Berkshire Hathaway. So let's share the screen. Okay. They added 15% to Chubb. Chubb is insurance. They know insurance. Added 13% to Domino's, Sirius XM Holdings, which he's had for a while, Lamar Advertising. But here's the interesting one. He initiated a buy into Google. Google was a big one. That's kind of interesting to me. Further reduced Apple, further reduced Bank of America. D.R. Horton sold all of it, home builder, and yet added a small amount to Lennar. Isn't that funny? 50 shares. But guys, Google is a big one. Google is not a big part of the portfolio, but it's several $1 billion worth of shares. If each stock is $250 a share, you're looking at $4 or $5 billion worth of stock that was purchased. Not a lot when they're holding $380 billion in cash. But the whole point is it's still a position. And I imagine that Warren Buffett, and he said before, Google is a company that every time you do something, they're involved. He's like, at Geico, we use Google for advertising. We love Google. So it makes sense. And I'm actually surprised it took them this long to even initiate a position into Google. But maybe they're trying to do something, who knows. But guys, Apple, they were into for a very long time, reduced it, keep reducing it. Same with Bank of America. It's not exactly the whole buy and hold forever, but they've said our ideal hold time is forever. So guys, we're going to go over Warren Buffett, we're going to go over Seth Klarman, Bill Ackman, Howard Marks, Monish Pabrai, Guy Spear. But more importantly, guys, if you like this kind of channel, you like what I'm saying, we're trying to teach that you buy a stock. When you buy a stock, you're buying a piece of a business. And all we're telling you to do is buy it on sale. If you believe that things can be on sale, we're the channel for you. If you believe in chasing what's fast growing and what's hyped, we're not the channel for you. But if you want to understand how to buy companies at better prices, do me a favor, subscribe to the channel. That's all we're here to talk about. We're here to try to talk about that when you buy a stock, you're buying a piece of a business, you're buying a future cash flow. That's it. So subscribe to the channel. I assure you, you will be a better investor if you stick with us for a long period of time. All right, so let's go find the next one. Bill Ackman, the one and only Billy. Okay, he started a big investment in Uber, reduced that a little bit, reduced Brookfield, reduced Restaurant Brands, ironically, reduced Alphabet, reduced Google. So from Q2 to Q3, he increased his position on Google by 21% and then reduced it by 10%. Meanwhile, what's Berkshire doing? They started a position. Do you understand, like, these guys, like all these value investors can think the same way, in a similar way, but then do completely different things. Ackman's reducing Google, Berkshire is buying Google. I do believe their goals are different. Berkshire's goal isn't to make 20, 30% returns on its company. Its goal is to just provide extra value to its investors and make sure they're buying big companies that have staying power. That is a very big difference that you have to understand. This is not something that's just this thing that they're trying to massively outperform. But look at this. In Q4 of 2024, Nike, they added 15%. In Q1 2025, they sold 100% of their Nike. Do you see what I'm saying here? That's what's interesting to me. Hertz. Oh, they're still adding to their Hertz position. That's interesting also. So this is Bill Ackman, very famous guy, very big investor, very big following. Uber, I wonder why he just sold 30,000 shares of Uber. Maybe they were selling covered calls or something. I don't know what it was. Okay. The next one is, the next super investor is Howard Marks. Now, Howard Marks is known as a debt guy. If you don't watch Howard Marks, I highly encourage you, go watch go read Howard Marks' memos. The Oak Tree Management memos are absolutely brilliant. Warren Buffett says every time it comes out, it's the first thing he reads that day. He wants to know it. Guys, look at these companies. I have never heard of how many of these. What the heck is going on here? No idea what these are. No idea what these are. That's Bill. That's Howard Marks for you. He is a deep dive kind of guy. So there he is. I guess there's nothing really to talk about here. Let's go to the next one. The next one, I believe, is Monish. So let's add Monish Pabrai, a guy we interviewed on this channel. I know it's Seth Klarman, actually. Seth Klarman, but it's like very bad track record recently. But Restaurant Brands increased 100%. We saw, was it Berkshire had decreased it or somebody disagreed? I just already forget. But he doubled his position there. Eagle Materials added 40%. Got rid of Viasat, Liberty Broadband, Icon, Amcor, Liberty. Reduced Wesco, Google. Reduced Google. So Berkshire is buying, two super investors are reducing. Adding to some other ones, Union Pacific, Ferguson. Is Ferguson Enterprises a Ferguson plumbing company? I don't know. Eagle Materials, another building company. So everybody sees differences in things. Everybody sees difference in different companies. That's what's amazing. All right, so let's go now look at Monish. Share that screen. So Monish Pabrai, he doesn't do a lot of activity. I like it. He sold all of AutoNation. I think Bill Gates is the big owner of AutoNation. So this is interesting. He bought Valeris 32%, then reduced it. Let's see what happened to Valeris stock between Q2 and Q3. Let's see if there was something that happened there. Let's stop this share. Let's go to my Everything Money software. Now let's log in. I'm already logged in, so let me share the screen. Window, let's go to Chrome tab, Everything Money. Okay, so let's go look up Valeris Limited. Let's see how the stock is done year to date. Oh, that's probably why. In two, he added 32%. and then he sold 43%. So in Q2, that was essentially starting here. He added and then he sold all here. Maybe had a nice run up and he thought, okay, I'm out. That could be the reason why that happened. And that's another thing, guys. Like these guys just do that very quickly because something happens. You know what I mean? And we have 5 community members who rate this company as a strong buy. What do they even do? Offshore drilling. That's, of course, our friend Dalton's big love of the channel. Okay, for his stocks. So let's pull up now Guy Spear, the very last one. Guy Spear, another guy we had on the channel, we interviewed. So this quarter, all he did was reduce Micron Technology. Like Guy, I feel like he just does a good job of sitting there and holding. He's been a long holder of Visa for a long time, or is it MasterCard? But either way, I remember when we interviewed Monish, his comment was, this company, Guy Spear, he's owned Visa, it's run up for a long time, and now he's like, where you can get the extra value, the extra gains. Well, maybe you just ride it out for a long time. It depends what your fund's goals are. And Guy Spear is just like, listen, I'm going to own this and run it for a while and own companies and stick with them for a long time. That's his prerogative. Again, guys, this is not, you shouldn't necessarily follow anything that anybody else is doing, but it's a good idea in terms of blindly. But cloning, I think part of cloning is, like Monish says, is look at what they bought and why they bought it and see if it makes sense to you. If the logic makes sense to you, it's a great way to find value. Of sitting there going, oh, I wonder why this person likes this. But remember, they report at the end of the quarter. They could have bought it the first day of the quarter. You don't know. You have no idea when they bought that time. So that's what's interesting there. So guys, 2 things I want you to do. 1, subscribe to the channel if you think you can get some value out of this. And 2, if you've been watching us for a while, even on the main channel, Everything Money, and you think you're ready to level up your investing game, which includes better knowledge, better understanding, sleeping better at night, and being able to handle downsides in the market. But more importantly, you want to understand how to value a company that'll give you peace of mind as you're buying investments. Check out our software, check out our community, everythingmoney.com. Click the link below. We have a great 7-day trial. I assure you that there's a reason why 83% of the people who sign up for the week trial buy for the entire year. It's because it provides immense value to them. So guys, go ahead and check it out. Subscribe to the channel. Either way, thank you for your time.